Hey guys, it is Mark Coe for 13th of August. Just checking in. Wanted to look at what some of the short-term day trading signals did today in both crude oil and the E-minis. So some days it just works, and today was one of those that did. I will tell you, it didn't start that way because it was some choppy sideways action. So basically, where we pick up the action is the U.S. Open. Right around here, this 8:30, 9 o'clock. Here's Pitt Open. And it was just some back and forth trading within this, so there was no real directional trading. And as I pointed out to all the folks in the room, any movement beyond 50 or underneath the figure has been snapped back. And if you're expecting trend, you've been disappointed. Well, that changed pretty quickly around 11:30. So again, here I'm going to pick up with the sell signal. You can see it right here at 11:15. Sell signal is at 67.35. So again, the reason this signal works is because of the movement that crude gave you, right? So one, you have to have the signal, and then two, the market that you're getting it on has to actually follow through. And this one did. It just happened to follow through in both directions, so it made it quite a nice day. So start off with the sell side of this signal. So sell side goes sell at 67.35. It completes its movement down here $1,500 later, or 150 ticks later, at 65.85. It then follows that up again. You can see the buy signal portion here, 65.97. 65.97 trades to 66.79. So add another $820 to that day, or 82 ticks per contract. That's really what I'm speaking about, what the move that was there. There was 150 on the down move, there was 80 on the up move, and you can see towards the end of the day it's trying to go sell side, but no real movement. So nice day there available in crude oil. Again, those are the opportunities that are available, and you have to make the most of them. There again, some sideways action into that, and that all started at about 11 o'clock. Let's take a look at E-minis. E-minis again with the 5-minute. It has to do with the fact that this market is actually moving, and you got a really solid move higher. So here's your 8 o'clock, 9 o'clock open. The move started much earlier. The move started at 6:15 in the morning, so you may have been left out of the initiation of that move, but certainly some opportunity on the sell side. And the sell side you see up here at the highs, 28.42. 28.42 rotates down to 28.24. So again, 18 points in the E-minis. 18 points per contract is just about $900, right? Some chop toward the end of the day, but all in all, those were really good moves for a short-term, basically follow-through momentum type move, and that's what it was aiming to capture. The shorter term stuff becomes a lot more challenging when it doesn't follow through. So you need a couple things. You need the initiation of the signal, and then you need an actual follow through. And it just so happens that both the E-minis and crude oil gave that follow through today. One thing I did want to point out in crude oil, just for bigger picture analysis, the big level I've been focusing on in crude oil, and I'll show you where it's coming from, but the big level in crude oil has been this 66 and a half type of area. And again, here's where it's marked from. Late June, tested again in mid-July, tested again over the last several days. Now, at 11 o'clock this morning, 12 o'clock this morning, as you're trading through that looks unbelievably bearish when you're down below that level. It looks unbelievably bearish. The long-term traders, anybody taking a look on a daily or a weekly basis, are not going to notice anything other than a blip. The short-term, the retail traders, the 5-tick stops, the 6-tick stop type of traders are going to look at that and say, wow, that was a big down move, and wow, it was a big up move, because it was. And what we call that phenomenon is rejection of those lower prices, right? The market tried the bottom side of this market, or of prices, right? Here's where they're coming from. They're coming from these mid-July prices. That's where the market first tested, rotates higher, tested, rotates higher, finally gives you a tradable move up above 70. Tests it, can't break it. Tests it, can't break it. Tests it, breaks it, comes right back. Again, I call this rejection. This just happens to be a magnificent rejection of those lower prices. So the way you use that is you come back and use this same area now as support, and all it's done is extend it, because you have to think about what happened in this move. A lot of short action, a lot of shorts start to get built up and just ripped away. They're now covering on the move back higher because they're short from the bottom. So again, it's a very interesting move. I would watch that for the rest of the week, and the way I would draw the zone would again be to look at that on the bottom, and I would extend it. Probably not that far. I need to move it a little bit lower, right? And I would take into account that move, but for the most part, you hold the 66. Sorry, I was trying to draw it right to about 66 to 66 and a half. That's what I would be looking at. That 66 to 66 and a half. I'm not going to worry about the last little 30 ticks that never close down there. That only happens on the very, 5-minute charts, 15-minute charts. And anything bigger picture, daily, weekly, even 4-hour, you don't get a close below 66. So I go back and use that level. Anyway, I hope you guys had an enjoyable day, 13th of August. Oh, one thing I wanted to point out, daily model, which has just been getting hammered lately. Again, this is for longer term traders, but just so you don't think everything I say is all roses, because it's not. The gold market today in the daily model it's going to get stopped out in less than one session. The model went long at the open, so the open was 12.18, and it was a stop on a close below 12.12. So anything below 12.12 and you would close it. It's going to close, as you guys can see. I mean, we're an hour and 10 minutes from the close, and we're trading 12.01. So you're going to add another 11 points at this stage of the game to that level. So, I give you the good and the bad. I spend a lot of time on the videos talking about the short-term trading, but the daily model has not been nearly as productive over the last 6 months. It's struggled. The last several years, it's still doing quite well, but it has given up some. And I think that's a product of what you've seen. You've seen a lot of sideways action followed by some pretty decent trends in the dollar, and that's what we've seen. So anyway, cheers for the day, and chat with you guys later in the week.